All right, let's dive into one of the boldest and, honestly, most controversial corporate strategies we've seen in a long, long time. We're talking about MicroStrategy's multi-billion-dollar bet, a move where they're basically staking the entire company on Bitcoin. It's a plan designed to completely upend corporate finance. So let's break it all down. $400 trillion. Just let that number sink in for a second. It's so massive, it's kind of hard to even wrap your head around, right? Well, according to the MSTR thesis, that number represents the total value of all traditional assets out there. And yeah, that's the prize they're going after. And this quote, this is the absolute heart of the entire strategy. The core belief here isn't just that Bitcoin is a good place to park some cash. No, the argument is that it's the inevitable final destination for all that capital, as people and institutions start looking for a way out of the low-yield, high-inflation world of traditional finance. So you might be wondering, how could a single company even dream of capturing a piece of a $400 trillion market? Well, the answer is in this really unique financial machine they've built, a structure that's designed to act like a giant capital siphon. This slide really gets to the core problem they're trying to solve. You have these vast oceans of money just sitting in traditional assets like bonds, earning next to nothing. With inflation doing its thing, these investments are actually losing people money over time. That forces investors everywhere to hunt for something better, a stronger store value. And here's the solution in action. This is the siphon. The whole strategy is to be a kind of funnel. First, it pulls in capital from the bond market, then the money market, and eventually the equity market too. And where does all that capital go? It flows directly into MicroStrategy's corporate structure for one reason, and one reason only, to buy more Bitcoin for their treasury. Okay, so this next part is where things get really counterintuitive. It's one of the most fascinating parts of the whole thesis. You see, while pretty much every other investor out there is terrified of falling prices, this strategy actually sees it as a huge advantage. This quote just perfectly captures that long-term mindset. Market dips aren't a risk, they're an opportunity. It's like seeing the asset you want to own go on a massive sale. It's a chance to get way more of it for the exact same amount of money. Let's see how this actually plays out. Look at this slide. The same chunk of investment capital can buy a significantly bigger stack of Bitcoin when the price is low versus when it's high. And that's the whole key. By scooping up more coins when the market is down, the company is actively tightening the available supply, which proponents believe will just pour gasoline on the fire when the market finally turns bullish again. So if this cycle just keeps going, accumulate, 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 where does it all end? Well, the long-term vision here is to build a totally new kind of financial giant. But what does that even look like a few decades from now? The end game here isn't just about making a profit. It's about achieving long-term dominance. And when you project this strategy way out into the future, you start to see an ambition that's, well, it's on a truly global scale. This timeline gives us a little glimpse into one possible future. It projects that if certain assumptions about Bitcoin's growth and inflation hold true, MicroStrategy could actually surpass the purchasing power of behemoths like Microsoft by 2027, and by the middle of the century, unprecedented market dominance. But, and this is a big but, this whole projection relies on a few really key assumptions. So let's be crystal clear about what's powering that projection, because everything hangs on these three things. First, it assumes Bitcoin's value will grow by 30% every single year. Second, it assumes cash will lose 6% of its value to inflation every single year. And third, it assumes that huge companies like Microsoft will just do nothing, that they'll just let their cash sit there and won't change their own strategies. Each one of those is a massive if, and whether they turn out to be right is the ultimate test of this entire thesis. Which brings us to the final piece of this whole puzzle. Proponents will argue that to really judge this strategy, you can't just look at the spreadsheets. They actually frame it as a kind of intellectual test, one with multiple layers you have to peel back first. So the argument, as they put it, comes in 3 steps. First, you have to fundamentally understand money and the concept of fiat currency losing its value over time. Second, you have to believe that Bitcoin is the ultimate solution to that problem. And only then, they say, can you truly appreciate the elegance of what MicroStrategy is doing as the best possible vehicle to access that solution. So at the end of the day, what we have here is this incredibly complex and audacious financial experiment playing out in real time. The people who believe in it have called its design a thing of beauty.
But the big question is still out there for all of us to think about. Is this a reckless, crazy, high-stakes gamble, or are we literally watching the birth of the future of corporate finance?